Hello traders, Lance Ippolito here with tradingcoachlance.com. That's tradingcoachlance.com. And I'm going to go over a bull call spread here on Apple. Now below is implied volatility, which is a free study on Thinkorswim. Simply click on this icon, edit studies and strategies, and just type in implied volatility and add it, and it will appear on your lower screen. So I have implied volatility here and the stock chart of Apple above. Well, I see implied volatility is relatively low in Apple. They reported earnings on 7/26. Today is August 8th. So implied volatility after earnings, volatility will get crushed or decrease because there's no longer fear and no longer an expected wild market move which comes with the earnings report. So I have Apple here trading about 108.15, and I want to develop an option strategy, a bull call spread, to look to trade Apple. Now, just looking at it on a glance, I see we run into some resistance right around this 112 range, and some support. We'll just call it 104 for some support here on Apple. So I believe Apple will fill up to 112. So I'm going to look for a bull call spread to take advantage of a positive move higher in Apple. Now, since today is August 8th, I could either trade the weeklies or I could go out further and trade the monthly August expiration, which they expire in 11 days. Now, I'm going to look at the option prices here. So I see the strikes, the 108, which are in the money with the stock at 108.15, the 109, the 110s. I like these 110s. I see very high open interest. I think Apple can pin at 110 for monthly expiration. But if that's too much risk developing, let's say a call fly or a butterfly, one can call it, I just want to go out and do a bull call spread. So I'm going to look at the 109 calls to buy. So I'll click on the 109 calls to buy, and they're trading pretty much at 98 cents. And I'm going to look for the 110 calls to sell. So if you simply click Control and hold it down and click Sell, I now see I have a bull call spread. So I will be paying about 34 cents for this trade. Now let me analyze it. Remember, I bought the 109 calls and I sold the 110 calls. So let's right click, analyze trade before I execute it. Now I am paying 34 cents debit. Therefore, my max loss in the trade is $34. So if Apple, let's say they come out and there's an Apple iPhone explosion and the stock drops to 105 tomorrow, well, my loss is limited here at $34 per contract. Now let's say Apple continues to move higher by August expiration and it closes above that 110 strike, I will capture the full max profit, which will be $66. So as Apple moves higher, all the way up to 110, my profits are capped there at $66. So I'm risking $34 to make $66. That is a bull call spread in Apple. The August expiration 109, 110 bull call spread in Apple. If anyone has any questions, feel free to shoot me a message, and please log into tradingcoachlance.com for further videos, trading strategies, and private mentoring.